Hey everyone, and welcome to the Deep Dive. You know how it is, we're always on the lookout for those stocks that could really make a difference in your portfolio. And today, we're diving deep into Trimble Inc. That's TRMB for you stock ticker fans to see if it's worth adding to your watch list. Now, we've got this really interesting analysis from Foking Alpha. Yeah, you heard that right, Foking Alpha. They've used some pretty high-tech AI stuff to try and predict where this stock is headed.
Well, AI is becoming a pretty big deal in the world of finance. It's like having a whole army of analysts crunching numbers 24/7. But we'll get into the AI stuff a bit later. First, let's talk about what Foking Alpha is actually saying about Trimble. They're calling it a bullish momentum phase.
Bullish momentum, that sounds promising, sign, but I think for a lot of people, myself included, that might sound a bit like financial jargon.
Yeah, it can definitely sound a bit intimidating, but basically bullish momentum just means that the stock price is showing strong signs of going up, and there's a good chance that upward trend is going to continue.
So like a rocket taking off? Well, not quite that dramatic. It's more like a snowball rolling downhill, picking up speed and size as it goes. But even a giant snowball can hit a bump in the road or melt away in the sun, so we need to look beyond the hype and really dig into the details.
That's a great analogy, and that's exactly what we're here to do today, right?
Absolutely. We'll unpack Foking Alpha's specific buy and sell recommendations, see what's behind those AI-powered insights, and of course, talk about how to manage risk.
Because let's face it, no investment is a guaranteed home run. So before we get too deep into the analysis, let's take a step back. For anyone who might not be familiar with Trimble, what exactly do they do?
So Trimble is kind of this fascinating company that sits right at the intersection of technology and industrial applications. They provide a whole range of solutions across a bunch of different sectors. Think construction, agriculture, transportation, even things like geospatial mapping.
So they're not just selling gadgets, they're providing the brains behind the operation.
Exactly. And that's what makes them so interesting from an investor's perspective. They're aligned with some of the biggest long-term growth trends out there. Things like automation, the increasing need for data-driven insights in every field you can imagine.
So they're not just riding the wave, they're helping to create it. Okay, so it sounds like the growth potential is there. But let's get down to the nitty-gritty. What does Foking Alpha's action plan actually look like for this stock?
We recommend starting by accumulating shares, basically buying in between $60 and $70.
Okay, so $60 to $70, that's their buy zone. But what's so special about that price range?
It's what's called a historically strong support zone. Think of it like a floor for the stock price. In the past, when the price has dipped down towards that $60 to $70 range, it's tended to bounce back up.
Interesting. So it's not just a random number they pulled out of a hat. It's based on actual past performance.
Exactly. It suggests a certain level of stability around that price point.
Okay, I like that. Makes me feel a bit more comfortable already. So if we buy in around that $60 to $70 mark, where does Foking Alpha see this potential upward swing taking us?
They've laid out two take-profit targets points at which you might consider selling to lock in your gains.
Ah, the fun part. Tell me more.
Okay, so the first target is between $90 and $100. This aligns with what's called mid-channel resistance.
Mid-channel resistance. Now you're going to have to break that down for me.
Imagine a channel sloping upwards. The stock price has been bouncing between the upper and lower boundaries of this channel as it trends upwards. That $90 to $100 mark represents a point of resistance, a hurdle the stock price needs to clear.
So if it breaks through that resistance, it's a good sign.
Exactly. It signals the potential for even more growth.
Gotcha. And what about that second target?
So target 2 is between $110 and $120. This one aligns with the upper boundary of that ascending channel we talked about. Reaching this upper boundary would suggest a peak in this particular upward swing. It also lines up with a parabolic trend line.
Wait, parabolic trend line? Is that anything like that snowball analogy you were using earlier?
It is. The parabolic trend line basically reinforces the idea that the upward momentum is getting stronger over time.
Okay, so lots of lines and channels and trend lines. I'm starting to picture a stock chart that looks like my kid's geometry homework.
You can definitely see that way. But remember, all these technical terms and indicators are just tools to help us make sense of those price movements.
Right, like a map to help us navigate unfamiliar territory. So we've got potential entry points and target prices. But I also noticed that Foking Alpha recommends setting a stop loss at 58 collars. Can you remind us what a stop loss is and why it matters?
A stop loss order is basically an instruction to automatically sell your shares if the price drops to a certain level. In this case, $58. It's like an insurance policy for your investment.
So if things go south, the stop loss limits how much I could lose?
Precisely. You're accepting a small potential loss to protect yourself from a much larger one. It's a key part of risk management, especially in a market that can be so unpredictable.
I'm starting to see why Foking Alpha is using AI for this analysis. It seems like there's a lot of data to crunch.
Absolutely. And that brings us to the most intriguing part of this whole analysis, those AI-driven insights.
Okay, yeah, let's talk about the AI. Should we all be putting our faith in robot stock pickers now?
AI in finance is definitely changing the game. It's like having a team of superpowered analysts working around the clock spotting patterns and trends that might not be obvious to us mere mortals.
So it's like having a crystal ball that reveals the winning lottery numbers.
Well, not quite. AI is a powerful tool, but it's still just a tool. It has its limitations.
So we shouldn't just blindly follow whatever the AI tells us.
Definitely not. It's important to understand both the power and the limitations of AI. It can process vast amounts of data and identify incredibly complex patterns, but it can't predict unforeseen events or sudden shifts in investor sentiment.
Okay, so like a sudden change in the weather can derail even the most carefully planned outdoor event.
Exactly. So we'll need to take a closer look at those AI insights from Foking Alpha and see what's really driving them.
Sounds like a plan. So far, we've got a company with some serious growth potential, a clear action plan based on technical analysis, and a way to manage risk with that stop loss. But I have a feeling there's still a lot more to uncover.
There is. Next, we'll dive into those specific technical indicators, those lines and channels we talked about, and see what they tell us about Trimble's potential.
Okay, I'm ready to decode those charts. Stay with us. All right, so let's dive back into those AI insights. I have to admit, I'm still a little bit skeptical. Can AI really predict the stock market?
Well, the idea of AI predicting the stock market is definitely a hot topic these days. And there's a lot of hype out there.
Yeah, for sure. But how much of it is actually real? Can we really trust these algorithms to make investment decisions for us?
It's not quite that simple. AI is a powerful tool, but it's not a magic crystal ball. It can process vast amounts of data and identify complex patterns. But it can't predict the future with 100% certainty.
So it's not like those sci-fi movies where the AI takes over the world.
Not exactly. At least not yet. The way I see it is that AI is like having a super smart assistant. It can help us see things we might not otherwise notice, but ultimately we're still the ones making the decisions.
That makes sense. So how should we be thinking about these AI-driven insights from Foking Alpha?
I think it's best to view them as valuable input, but not the only factor in our decision-making.
So it's one piece of the puzzle, not the whole picture.
Exactly.
Okay, so let's move on from the AI for now and talk about those technical indicators. We've been throwing around terms like ascending channels and parabolic trend lines, but I think it's time to break them down and really understand what they mean.
Sure, let's start with the parabolic trend line support.
Okay, parabolic trend line support. That sounds pretty intimidating.
It might sound complicated, but it's actually a pretty simple concept. Imagine a curve that gets steeper over time, like a skateboarder gaining speed as they go down a ramp. That's a parabola.
Okay, I can picture that.
In this case, Trimble's stock price has been following that kind of upward curve, with each dip being followed by a stronger rebound.
So it's not just going up, it's accelerating upwards.
Precisely.
Got it. Now, what about those mass CD and RSI signals? I always get those two mixed up.
No problem. Those are two of the most popular technical indicators,
Yeah.
but they can definitely be a bit confusing.
So can you give us a quick refresher on what they actually tell us?
Sure. Mass CD stands for Moving Average Convergence Divergence.
Moving average convergence divergence.
Catchy.
Yeah, it's a mouthful. But basically, it compares short-term and long-term price trends to identify changes in momentum.
Okay, so is that a good thing or a bad thing for Trimble?
In this case, the MACD for Trimble is showing a positive crossover, which is a bullish signal.
Bullish, so that's good, right?
It suggests that the stock is likely to continue rising.
Awesome. Now, what about the RSI?
RSI stands for Relative Strength Index. It measures the magnitude of recent price changes to assess whether a stock is overbought or oversold.
Overbought, oversold. What does that even mean? Think of it like a rubber band. If you stretch it too far, it's eventually going to snap back.
So if a stock is overbought, it means it's gone up too far too fast.
Exactly. And it might be due for a correction.
Okay, so where does Trimble stand on the RSI?
Right now, the RSI for Trimble is indicating that the stock is approaching overbought territory. This could suggest that a pullback is coming. But there's a nuance here that's important.
A nuance. I love nuances.
The analysis points out that there's still some room for growth before we'd expect to see a significant pullback.
So even though the RSI is getting close to overbought levels, there's still potential for further upside in the short term.
Exactly.
So it's like a car approaching a speed limit. It can still go a little faster before it needs to slow down.
Great analogy.
Okay, so we've got the parabolic trend line, the MSD crossover, and the RSI, all pointing towards positive momentum. What's the last technical indicator we need to cover?
The triangular breakout confirmation.
Triangular breakout confirmation. All right, you're going to have to explain that one.
Imagine a triangle on a stock chart. The price has been bouncing back and forth between a narrowing range, like it's trapped within the triangle's boundaries.
Okay, I'm visualizing it.
When the price finally breaks out of that triangle, it signals a decisive move in that direction.
So which way has Trimble broken out?
In this case, Trimble's price is broken out upwards, confirming that bullish trajectory we've been discussing.
So it's like the stock was building up energy, and now it's finally breaking free.
Precisely.
That's great news. But before we get too carried away with all this talk of upward trends and potential gains, I think it's time to bring things back down to earth and talk about risk management.
Absolutely. No investment is without risk. And it's important to approach every investment with a healthy dose of caution.
So what are Foking Alpha's top tips for managing risk?
Well, first and foremost, they emphasize the importance of position sizing.
Position sizing.
This means determining how much of your overall portfolio you're comfortable allocating to a particular investment.
So if I'm feeling a bit cautious, I might only put a small percentage of my portfolio into Trimble.
Exactly. You don't want to put all your eggs in one basket, especially if you're not comfortable with the level of risk.
Diversification. That's the key, right?
One of the most important principles of investing.
What else does Foking Alpha recommend?
They also reiterate the importance of stop-loss orders.
Right, those safety nets we talked about earlier.
Exactly. Setting a stop-loss order can help you limit your potential losses if the market takes an unexpected turn.
It's like having an insurance policy for your investment.
Precisely.
Any other must-dos on their risk management checklist?
Their last piece of advice is to stay informed about broader market trends and any macroeconomic factors that could impact the stock's performance.
So we shouldn't just be looking at Trimble in isolation. We need to consider the bigger economic picture.
Exactly.
Okay, so keep an eye on the bigger picture and be prepared for unexpected events.
It's all part of being a responsible investor.
Well, it seems like we've covered a lot of ground here. From AI insights and technical indicators to risk management strategies. But I feel like we're still just scratching the surface.
We are. We've talked a lot about the technical analysis, but let's not forget about the company itself.
Right, Trimble is more than just a bunch of numbers on a chart.
Exactly. Next, we'll step back and look at the bigger picture. Trimble's place in the rapidly evolving technological landscape and the potential opportunities and challenges that lie ahead.
Okay, I'm ready for the big picture. Stay with us.
All right, so we spent this whole deep dive really trying to get a handle on Trimble as an investment. And I got to say, it's been a wild ride.
Yeah, we've covered a lot of ground, haven't we?
We've looked at their business model, those AI predictions and all those technical indicators.
It's a lot to take in.
But now it's time to step back and see the forest for the trees. So after all this, what's your big picture assessment of Trimble? You know, I think Trimble is in a really interesting position. They're operating in a space that's changing so rapidly. And they seem to be doing a good job of adapting and innovating to stay ahead of the curve.
Yeah, that's one thing that really stood out to me. They're not just reacting to technological advancements, they're actively shaping the future.
Exactly. And their focus on areas like automation, data analytics, and connected systems, that puts them right in line with some major long-term growth trends.
Definitely. Plus, their global reach gives them a huge advantage.
Yeah, they're not just a small player. They've got a presence in all sorts of industries all over the world.
So that's the good news. But of course, every investment has its risks. What are some of the potential challenges that investors should be aware of when it comes to Trimble?
One of the biggest challenges for any company in a fast-moving technological landscape is staying ahead of the competition.
That makes sense.
Trimble is facing competition from both established players and these agile startups that are popping up all over the place.
So it's a constant race to innovate.
Exactly. And that requires a lot of investment in research and development, which can definitely impact profitability in the short term.
Right. It's a delicate balance.
You have to invest for the future while still delivering results in the present.
Okay, so competition is one challenge. What else should investors be thinking about?
Another thing to consider is the cyclical nature of some of the industries Trimble serves.
Cyclical.
Yeah, for example, the construction industry. It's known for its ups and downs,
That's true.
and those cycles can have a direct impact on demand for Trimble's products and services.
So even if Trimble is executing perfectly, they could still be affected by factors outside of their control.
That's the nature of investing. There's always some level of market risk that you can't completely eliminate.
Okay, well, speaking of risk, We've talked about some strategies for managing that risk, things like position sizing and stop loss orders.
Yeah, those are essential tools for any investor.
Any other parting words of wisdom for folks who are considering adding Trimble to their portfolio?
I think the most important thing is to really understand your own risk tolerance and investment goals.
Right. Don't just jump into something blindly.
Exactly. Before you invest in any company, you need to ask yourself some key questions. How much risk am I comfortable with? What are my expectations for returns? And how does this investment fit into my overall portfolio strategy?
Those are great questions. And honestly, I think everyone should be asking themselves those questions regardless of what they're investing in.
Absolutely.
Investing shouldn't be about chasing the latest trends or trying to get rich quick. It's about making informed decisions.
It's about the long game.
Yeah, it's a marathon, not a sprint.
And remember, the best investment you can make is in yourself. Invest in your financial education. Learn as much as you can about the markets and how they work.
That's great advice. So after this deep dive into Trimble, what's the key takeaway for our listeners?
Trimble is a company with a lot of potential. They're well positioned in a growing market, they're innovating, and they have a global reach. But like any investment, there are risks involved.
So do your research consider your own risk tolerance and make an informed decision?
Exactly.
Well, it seems like we've reached the end of our Trimble journey.
It's been a fascinating one.
Thanks for joining us, everyone, and we'll see you next time for another deep dive into the world of investing.